Welcome to Stocksman. Today I will go over one of my favorite trading strategy using the opening range breakout. The ORB strategy is a new strategy that I have recently learned for trading stocks. For this strategy, there will be 4 steps we need to follow. Let's explore these 4 steps. Step 1. Define the opening range. There are several ways I like to do this. One is to use the previous day high or the previous day low. The second is to use the pre-market high and pre-market low to define our opening range. Step 2. Wait for the breakout. Once we have plotted out our opening range prices, we wait for the price to move towards those prices for a breakout. If the price breaks above the opening range high, it's a signal we should go long. Opposite, if it breaks below the opening range low, it's a signal we should go short. Step 3. Confirm with volume and candlestick patterns. To increase the possibility of this strategy, we will also look for breakout that is accompanied by higher trading volume and strong candlestick or patterns. Step 4. Set a stop loss. As with any trading strategy, risk management is crucial. We will set our stop loss just below the breakout point or at the middle of the previous candlestick. We take profit and move our SL to at least break even, then trail our stop. Once all criteria are met, it's time to execute our trade. Remember, you should always practice first before trading with real money. Don't forget to hit the like button and subscribe for more trading strategies tips.